Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So the S&P 500 SPDR SPY is holding up much better than the other broad market ETFs and even better than the broader market. But I think we have to take these broad market conditions into account. I'm going to look at some of those with a breadth indicator, and then we're going to look at defensive groups versus offensive groups over the last 3, 6, and 12 months. And then we'll see that we have a choice because when you compare SPY to, say, the materials SPDR, XLB has a much clearer uptrend and a much more bullish chart. So I'm going to start out on Stock Charts ACP, and I've got two indicators here. I've got the trend composite, which aggregates signals in 5 trend following indicators, and you can see it's +1 for SPY, which means 3 of the indicators have bullish signals and 2 have bearish signals. The net is +1. And if you're interested in learning more about that indicator, if you go down to plugins and you open that link there, you can see there's a Trend Investor Pro Indicator Edge plugin for more information. And then on the bottom, I've got the difference between the 5-day SMA and the 200-day SMA, and you can see it's at -106%. So that means the 5-day is 1% below the 200-day. So there's a conflict here. And there's often a conflict when you're looking at trend following indicators. Sometimes they're all in line together and you have a clear picture of the trend. But here there's a conflict. And then we look on the price chart, I can see some conflicts as well, especially when we go, say, 2022, the whole period, the whole year, this year so far, 3.5 months. And then if we just look at the past month. Now, with just these two indicators, you can compare the performance of SPY against other ETFs. For instance, I was looking through my major index ETFs, and I noticed that only 2 had a positive trend composite. The SPY I just showed you, and the equal weight S&P 500 RSP. So those 2 by far are holding up the best. But then if we go down, say we go down just to QQQ, we can see that QQQ is in a downtrend. It's been in a downtrend since the middle of January. And you can see the 5-day moving average is 6% below the 200-day. That right there tells you there's relative weakness. And then if we look at small caps, we can see a similar picture. We have a downtrend since the latter part of the end of November, early December. That breakdown there. And the trend composite remains bearish. And the 5-day is 8.5% below the 200-day. So clearly these 2 are weaker than SPY and RSP. And then if we go to mid caps, we can see that the mid cap ETF MDY has been in a downtrend since mid-January. And the 5-day is 3.6% below the 200-day. Now it has been bouncing here, but overall I think since December, since this lower high and this breakdown, we're in more of a downtrend than an uptrend. And at the very least, the latter 3 ETFs, QQQ, IWM, MDY, are weaker than SPY and RSP. So this is the main analysis page here at TrendInvestorPro.com. And I've got all the main articles here. I posted one on Thursday today covering some of the stuff in today's video. But here we have the market regime page, which tells us whether we're in a bull market or a bear market based on the composite breadth model that's been tested back to 2003. And we've got the ETF trend signal and ranking table that I want to go to next. And what this does is it ranks the ETF by price performance, and it also tracks the trend composite signals. So we can see we got a soak, close, sort here, and the top ETFs, consumer staples, corn, Saudi Arabia. That's obviously oil related. Sugar, food and beverage. So we're seeing a lot of defense there with consumer staples twice and food and beverage, and commodities, corn, sugar, Saudi Arabia is related to oil. Small cap energy hit a 52-week high. So right there we can see where the leaders are, and the leaders are defensive and commodity related. And here are the trend composite signals. And we can click this column to see the recent signals in the trend composite. Silver miners recently triggered bullish, and Malaysia recently triggered bearish. So check out trendinvestorpro.com if you'd like to see this table and learn more. So before we get to the chart price analysis of SPY, I want to set the stage. Now, I already showed you that small caps, QQQ, and MDY are in downtrends. So the broader market is weaker than, say, the S&P 500. And then I look at the percentage of stocks above the 200-day moving average. And these indicators are part of the composite breadth model. But we can see it's been bearish for the S&P 500 since it moved below 40% in January. It needs to get back above 60% to get bullish. It did not in late March, and it remains below 50%. And then we look at the NASDAQ 100. Less than 35% of stocks are above the 200-day. That's not bullish. And we look at the mid-cap 400, less than 40%, and the S&P small cap 600, less than 40%. So these three, less than 40% of stocks are above the 200-day, which means more than 60% are below. And the S&P 500 is split at best. That is not a bull market configuration, and that influences my price chart analysis when we look at SPY. So this perf chart here shows some offensive groups on the left. First we got SPY, then we got technology, semiconductors, financials, regional banks, and home construction. And this is a 3-month performance chart, and you can see all of these offensive groups are actually down. And then we can see the defensive groups, utilities, food and beverage, staples, healthcare, and dividends. These 3, 4, 5 are up. So the defensive groups are not only leading, but they're actually positive. And the offensive groups, they're not only lagging, but they're negative. And I'm not usually concerned when defensive groups outperform, as long as the offensive groups are up. But the offensive groups are down and actually trending lower. And the SOX semiconductors actually exceeded its March low during the April decline over the past week. So that is negative, these semiconductors lagging. And if we back this chart out, if we go 6 months, we can see a similar picture. SPY is up over the last 6 months, but these 5 offensive groups are down. Technology is holding up the best, but it's still down over the last 6 months. And you look at these defensive groups, they're all up, and they're up more than 10%. And just for grins, I'm going to go out a year. So we look at 1 year, and it's a little more mixed. All right, we can see that SPY is up, but technology is up less. Financials are up less. Semis are actually down over the past year. Regional banks are down. Housing is down a whopping 17%. All of the defensive groups are outperforming. So this tells me we have a risk-off environment in the market, and that influences my price chart analysis. So if we look at SPY on the price chart, I am considering this move down here from the high there in late December, early January to the closing low there in early mid-March to be an impulse move down. So it's basically part of the bigger trend, which is now down. You broke down here. We've had a really sharp advance. And this is what makes life confusing, is you have what looks like a really strong decline that has broken the bull's back, but then you get really a historic 11-day advance, up 10.7%. But if you look at where we failed, it's a normal area to fail for a counter trend advance. That's because first we have broken support that turns resistance. Second, we have resistance from the February highs. That kind of marks a zone. And then we retrace 2/3. So this is basically 3 steps down, 2 steps back up, and it looks like we have reversed and we're moving lower. Now, there could be a lot of noise in here, but I think the overall trajectory is down. And the reason I have that bias is because I showed you the percent above 200-day moving average indicators. I showed you the lagging and downtrends in the offensive groups, the leading and uptrends in the defensive groups. And so that gives kind of a bearish bias on the broader market. And I also showed you QQQ, IWM, and MDY and downtrends. So I don't think SPY is an island. It can't carry the market on its own. I think this will ultimately weigh and SPY will at least test the March lows. Now remember that SPY is just one ETF, and there are thousands of ETFs out there. The master ETF list here at Trend Investor Pro has 274 ETFs. I had to take the Russian ones out because there were 276 before that. But if you look at SPY, you see that it broke the September-October low, and it is 8% or so below this 52-week high. So it's not really near a 52-week high, and has a potential lower high working here. So there are other ETFs that are stronger than SPY, quite a few, and a lot of them are commodity related. But one ETF that I noticed was RTM. That's the Equal Weight Materials ETF. And you can see that it's continuing to trend higher. It hit a 52-week high there in late March, pulled back with a little flag and broke out. The trend composite has been bullish since early November here. The 5-day has been above the 200-day for over a year. So this is clearly a better candidate than SPY when it comes to chart strength and trend. And then if we look at XLB, which is weighted by market cap, it's the materials sector, a lot of chemical stocks in this ETF. I think 40% of the ETF is made up of chemical-related stocks. And this is a bit of a commodity play because, let's face it, chemicals are commodities. And if we look, we can see a very choppy uptrend. And the trend composite, it's going to whipsaw when you get choppy uptrends and deep pullbacks. Because, we had a lower high and a deep pullback, but we ultimately held this low and surged. And then we had another deep pullback, but we ultimately held the September-October low. Remember, SPY broke below it. So the fact that it held showed relative strength. And then you got the breakout here in March with the surge, and XLB is much closer to its 52-week high, has a potential pennant forming, and a pennant breakout would open the door to new highs. But the main thing is we have a choice. SPY is not the only ETF out there. QQQ is not the only ETF out there. There are lots of other ETFs with stronger charts than SPY and definitely than QQQ right now. So we can find those stronger uptrends by narrowing the master list. Here at Trend Investor Pro, I've got an all-weather list that has just 50 ETFs. And it really narrows down the list and removes all the duplicates out there. And so this is ranked by the Stoke Close Value, which is my performance ranking measure. And all these ETFs are stronger than SPY. Healthcare down at the bottom, dividends, healthcare providers, XME, steel-related, very strong. And if I scroll down, you're going to see we're going to get to SPY, but it is in an uptrend, but is in the bottom half of this group. So all these ETFs that are in uptrends and have a higher Stoke Close value are stronger. Aerospace and defense is another one that was highlighted in the Tuesday report because we have a bull flag working in that ETF. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.